Welcome to TheoTrade. This is Don Kaufman. It's June 26, 2017, doing the Theo Night video. What we're going to share with you in this session are a couple of really important levels inside of the S&P futures, followed by a little discussion of the Nasdaq, which continues to be, well, a little bit of an insanity issue inside of the Nasdaq in terms of the overall movement. This is something I discussed in extent on the weekend update over here, but just to give you a quick heads up here, as there's still 2 minutes and 35 seconds left in the trading day, the Nasdaq having a range from 58 roughly 50 all the way down to 57.70. Again, it doesn't do it justice just to mention it, but we're looking at a multitude of days with well beyond 50-point moves. Of course, in this case, 80-point move inside of the Nasdaq. It's something, again, I discussed in the weekend update. It wouldn't surprise me to see 200, even 300-point moves inside of one trading session in the Nasdaq. Now, let's get to it. Let's really start with the S&Ps, because there's a few levels that I've not only picked up on, I want to share with you inside of the S&P futures. Now, the S&P futures have tendency to trade in kind of tranches, and they trade in these tranches because of heavy risk that often exists inside of the SPX. So if you guys remember, we'll discuss the SPX on and off here at TheoTrade, but if you take a look at the SPX, and again, looking at the chart isn't necessarily going to do it justice in this particular case. The SPX is a very range-bound product. Of course, this is the week-to-week range, but if we discuss the SPX, no discussion would be complete without discussing the massive volume that trades in here. So in about the average day, the SPX does just around 1 million contracts. And this is something I was discussing a little bit earlier today in the TheoTrade chat room. So bear with me as I take you through this. But thus far in about 2017, let's just say we're doing somewhere in the neighborhood of about 16 million, total option contracts. We're doing 16 million total option contracts. On average, the SPX, does around 1 million of that 16 million contracts. But in addition to it, in the average day over there, we also see about 3 million inside of what? And that's inside of the spiders. In addition to it, you can also add in the VIX. So before you know it, in the VIX will average well over like 500,000 contracts a day. But the first and foremost, and even if we will discount the spiders and we'll discount the VIX over here, if you look at the SPX and you think, okay, the SPX is doing 1/16 of the total volume of the entire market every day. Yes. However, the SPX, there's the closing bell. The SPX happens to be none other than a 2,000 and roughly what? $440 product. $2,440 product is roughly, if you will, 20 to 30 times the size of an average product. I mean, think about a $2,000 product versus, I don't know, Apple. And you start to see divide Apple into 2,440 and you're like, okay, I get it. The contract size inside of the SPX is monumental. So of all the 16 million option contracts that are trading, the SPX accounts for, in terms of what we term notional value, it's the big player out there. That's the point to be made. And again, we could look at the spiders, right? And the spiders are doing, today's a light day at 1.5 million contracts. We can look at the VIX. Every one of these contracts, the VIX is a little bit heavier today. It's 600,000 contracts. Every one of these products is directly related to the S&P. Not to mention the S&P futures themselves. Well, the S&P futures themselves, they too have heavy options volume. And this is something that a lot of people don't discount. So all of this, goes to this confluence, if you will. Look at this, almost 200,000 contracts more in the S&P options on futures. All of this, goes to the confluence that the S&Ps trade, with, again, in these tranches based on risk levels. So when we hit one of these risk levels, it becomes very apparent and very, very transparent. And let me actually show you all the way here an intraday trade down to 1 day, 1 minute. And I'll show you exactly what this means. The S&Ps here are falling out of bed early today from 2446. They're seeing some heavy sell side activity. And the moment we actually hit, and I want to show you again specifically on my chart here. So let me kind of freeze this and highlight it. The moment we hit 2438 on the button, okay, the volume absolutely explodes inside of the S&Ps. 2438. So I've been watching this level for a period of time. It grabs my attention. Anytime we start cresting under this 2438, okay, risk once again in the S&Ps explodes. Think, okay, of this level of 2438. Think of it almost as gravity, that the marketplace is getting sucked into it. Okay, don't think of it, if you will, as support and resistance, but breaking off the 2438 level once again then would cause firms to either buy if we go higher, or it's going to cause firms to sell if we ultimately go lower. Okay, this 2438 handle, it's all that you have to look at in today's trading session. I'm going to bring up something much more important here momentarily. Okay, even bouts of time where we're just skirting right along this 2438 level, the moment we ultimately start to threaten to even crest through it. Now forget about today's close for a second, which saw monumental volume over here. Even when we threatened to start to get away from this 2438, you'll see massive spikes inside of the volume. And again, we're 1 day, 1 minute chart over here. And as we draw into the close, we started pulling away from the 2438. And here we are again in the aftermarket, and we see monumental volume into the close as we actually close definitively under 2438. So on your chart, this is just a price level that I put on the chart at 2438. Again, it's kind of one of those tranches. Now, if you look back of a 30-day, 1 hour, there are 2 definitive levels that I have actually marked recently. Another one of these levels where risk seems to be very, very apparent happens to be none other than, and I'm going to zoom into this so you guys can see it, this level down below over here is 2411. We're back inside, okay, of this channel. Now, what you're looking at in terms of a chart, let me just zoom out here momentarily, okay, and everybody can get a kind of a full view of it. This chart happens to be none other than, and I'll show it to you again, a 30-day, 1 hour. This is the last 30 days of trade based on a 1 hour, okay, and what you'll see is a skirting up and along, okay, 2438. We crack through it for brief and fleeting moments, come all the way back down into, and again, if you look, okay, at the last really heavy, volatile kind of trading day, we literally almost touched the, again, 2411 handle, okay? We bounce off it, come right back to 2438. What we're doing right now is pinging back and forth, okay, between huge risk parameters inside of the SPX. So, and I'm looking, yes, I'm looking at the S&P futures because the S&P futures are used as a hedge to the SPX. And I'm telling you, you mark down these levels when you find them. Why? Because now we're actually under the 2438. I was talking about, don't think of these as support and resistance. No. However, it's very likely here, okay, that we could pull back up to 2438 in the aftermarket session. But if we continue to see sell side activity over here, we're a clean shot right down into that 2411. So at this point, okay, because we have pulled away from 2438, we do appear to be a bit bearish in the short duration. Again, assuming in the overnight trade, we don't pull right back up into this 2438 kind of handle. Now, with that, those are the S&P levels, okay? Look for 2411, 2438. Now to see a marketplace coming all the way back to something like 2411 would be quite substantial this week. And the reason it would be quite substantial, it would be very, very slightly outside of the expected move, okay? The downside of the expected move for this week in the S&Ps would be 2416. Again, in the SPX it would be 2416 is really kind of that downside target. It's doable though. And I think you need to be very open-minded at this point that we've cracked back inside those levels. Now, let's cruise over to the Nasdaq. The Nasdaq, once again, is Mr. Toad's wild ride inside of today's session. When it comes to the Nasdaq and levels, let me just tell you guys something. Right now, all bets are off. Okay, all bets are off. I'm going to show you why all bets are off. People are trying to call different levels inside of the Nasdaq over here. This thing is trading, okay, as chaotic and it really is schizophrenic as anybody has ever seen in a marketplace before. And I base those statements on, take a look at things like the S&P sector indices, right? You're looking at things like advanced decline line over here. First of all, you got IT down, you got financials up, but that to me didn't do it justice. What did it justice for me is when I actually looked at the Nasdaq 100 itself. Okay, the advanced decline line in the Nasdaq 100 today, throughout most of the day, was actually positive, with the Nasdaq down 0.6%. The only thing that's driving the Nasdaq lower at this point happens to be, okay, ultimately what? Your Facebook, your Apple, okay, your Google, your Amazon, your Microsoft. It's it. It's the same usual suspects that are getting pummeled. If you take a look at Facebook specifically today, and I talk about, again, a little bit of volatility in the marketplace, this is insane. This is 156.50 all the way down to 153.50, all right? So, hey, clearly it's a $3 move. Why do I call a $3 move in Facebook insane? A $3 move in Facebook is insane because that's the expected move for an entire week. It all happens in, 24 hours, not even 24 hours. The market's only open 6.5 hours, okay? They're wild moves. But volatility in the marketplace is still not picking up. Like, are people not seeing how wide, okay, these moves happen to be? And again, it's expansive ranges. Oh, it's okay. Oh, it's okay. The VIX today actually closed under 10, all right? Why? Because the S&Ps were largely unchanged. You have to ask yourself again the question, how long is it going to be before somebody gets nervous and the risk starts to proliferate beyond your Amazons, your Googles, your Apples, okay? The theme over here, watch the levels inside of the S&Ps carefully, okay? Last but not least, I think we're going to see some more sell-side activity start to really hit the Nasdaq this week. This is not a product I often talk about, but I think it's important. One of these trading sessions, if you start to see the VVIX get bid back up, that and only that would be a sign of risk starting to proliferate in the marketplace. All I'm saying is that right now, the risk is like isolated. It's literally like captivated and isolated inside of Apple, inside of Google, like they're trading like their own autonomous marketplaces. This is not healthy price action. All of a sudden, you're going to see that risk kind of proliferate. And when it does, you're going to see that specifically inside of the VVIX. Again, two things. Watch the VVIX. If it gets bid up on a percentage basis, more than about 5% in a trading session, things are going to get serious. On top of it, watch the 2411, okay? And watch that 2438 number inside of the S&P futures. Thanks, everybody, for joining us here at TheoTrade.